Welcome guys. If you're new here, I do in-depth stock market analysis videos on disruptive technologies, SPAC mergers, dividend stocks, and individual stocks to buy now. None of this is investment advice. This is just an opinion channel about money. So I'm actually excited to start a new series of videos here. I'm going to start a series on penny stocks, and I want to kick it off with this stock that everybody's talking about right now, which is Bionano Genomics, ticker symbol BNGO. This one has gotten a ton of attention. There's a million different things happening to this little company all at once, and it's an absolutely crazy story. And that's what's going to make this video a little bit different, I think. I think what I really need to do here is tell you the full story behind this one so that you can understand the technology a little bit, you can understand the company, you can understand the situation that they're in, and all of that will help you make a good decision about a potential investment in this one. And after I tell you that full story, I'm going to give you my complete opinion on what you could possibly do with this one at the end of the video, so make sure you stick around. Okay, so to really understand this one, you have to understand the mapping of the human genome. So this was something that we achieved back in 2003, and I remember this. Everybody was super excited. It was all over the news. Everybody was saying there were going to be all these incredible new drugs and new therapies and new treatments and new tests. It was going to be an absolute game changer. It actually took a long time for these things to slowly start making use of that mapping of the human genome. One of the reasons that it took a long time is that it's not enough to just have that complete reference map. You also need to be able to sequence an individual genome, compare it to that base reference for a human being, and then find the variations and the differences, and then use those identified differences to diagnose a condition, to look at a potential problem, to come up with a new drug, to develop a new test based on detecting that variance. So there's a ton of different applications for this. So this is the hard part. The hard part is actually reading an individual genome. So the current technology for this is mostly based on something called a short read, and what they do is they actually make a tiny little copy of the individual genome by synthesizing some DNA, doing this short read of a segment of the genome, and then comparing that to the overall map to try to find these structural differences. The problem with the short read is that it is too short. You don't actually have enough of the genome to really find where it is in the overall context of the human genome reference map and figure out what to do with it. So the problem with this short read is that you're basically zoomed in too far on the genome. You can't see the forest for the trees, and it's not as useful as it could be. One of the key players in short read technology is a company called Illumina, and they are actually one of the key holdings in ARK Invest's ETF, ARKG. That's a really key point, so remember. So the next gen technology on top of short reads is a technology called smart sequencing, SMRT, and one of the primary companies behind this is a company called Pacific Biosciences, PAC-B, also another key holding in ARK Invest's Genomics ETF. So the smart sequencing for long reads is much better. Obviously, it's reading a longer sequence of the genome. It's more useful for more things, but it's a lot more expensive, and it's still not a perfect solution for reading the entire genome and opening up all of those additional possibilities. And so that is exactly where this company, Bionano, comes in. They have a technology with what they call their Safer platform, and it can do a very long read using nanotechnology to unwind the genome and map it out in a long enough sequence that it's very useful. You now have the ability to zoom out far enough that you can take the entire read that you've done, compare it to the overall context of the fully mapped genome, and identify a lot more structural differences, variations, mutations than you could with the previous reading technologies. And this is really huge. So now it's getting closer to the point where you can do cheaper, faster, more complete comparisons. And from there, you should then have the ability to develop all kinds of additional diagnostic tests, map that back onto different therapies, different pharmaceutical products. All kinds of possibilities could open up if this technology becomes more widespread and more adopted. So basically, Bionano was in this position back in 2017 when they did their IPO, and they went to market basically with this technology and with a plan to sell these devices that implement the Safer platform into all of these labs across the country. So the original plan is to go out and sell these things for $150,000 a pop. And it was very easy to see what the market size was because you could just look at all of the labs that were capable of doing this kind of of work, and the device market at the time was estimated to be about 9,500 units, $150,000 each. So that basic addressable market was very easy to define. That's when the IPO happened for these guys. But then things went bad. It turns out that it's a really, really tough business trying to sell new diagnostic devices into these labs. You have to really, really have a very high gold standard level of evidence that this particular device is better than what's currently in use, and that it's worth the investment of 150 grand a pop to actually turn over your equipment, move to this new process. You need a lot of evidence and you need a lot of people behind it. Between 2017 and 2019, these guys only managed to install 116 devices, far less than they would have hoped for. Around that time, they ran into some debt problems, and they actually had to sell additional shares of the company in order to stay afloat. So this led to a massive dilution of the company as they issued more and more equity just to try to stay afloat. So combined with these disappointing sales and the massive amount of shareholder dilution that was going on, the share price absolutely sunk. And, when the pandemic then hit on top of that in 2020, these guys were in a very, very bad way. But around this time, during the pandemic, they actually started to implement a bit of a turnaround strategy, and it began with a new business model. So they really realized that the difficulty here was in selling these very, very expensive devices into the labs, and so they pivoted to a bit of a subscription model. And they started offering customers through a third party the ability to do these samples on a per cost basis without having to buy the machine. So depending on the commitment level, they were able to charge anywhere from around $500 to $650 per sample processed, which was way more palatable to these labs that didn't have a lot of samples to be processed. And so far it's looking good. On the last quarterly report, they were able to sell 500 of these samples, which is a huge increase in terms of what the old business model was capable of. Okay, so all that brings us up to the present day and the craziness that's actually happening with this company right now. So the key thing here is that there are a ton of drivers behind the stock price right now, all of which are pushing it up. So let's go into what some of these are. So I already talked about the new business model. That is absolutely attracting new buyers because they smell a turnaround story in this stock. Number two is this threat of NASDAQ delisting. So when that share price sunk down and it stayed down below $1, the exchange came to them and said, hey, you got to get your share price up somehow or you're going to be delisted. NASDAQ has rules about penny stocks, and they would delist these guys. So just recently, they were able to at least get the share price up enough that NASDAQ gave them a 6-month extension on delisting, which is actually a hugely good news, and it lifted a lot of the negative pressure off the stock. That started driving the price up. Another key thing here is that one of their customers, named Praxis Genomics, actually got approval for a new laboratory test using the Safer platform. And so this is huge because it actually lends a lot of credibility to the platform that this customer was actually able to develop and get approval for this particular diagnostic test. I think to a lot of people, it's a solid indication that additional tests are going to be developed on top of the platform, which is going to drive even more adoption into the future. That realization is pumping up the share price. People are excited that they have been able to pay down their debt. So to some extent, they did this through proceeds raised through share dilution, which is not ideal. But at the end of the day, they did manage to pay down the debt, and they've gotten some reprieve from their lenders. Again, people are excited about this. And finally, here's the single biggest thing that is driving this surge in share price, which is the rumor that ARK is going to invest in these guys. And so this all seems to be based on a tweet that came out on December 24th from this ARK analyst. And all he said was, hey, it'd be cool if I could talk to the CEO of the company. I'd like to learn some more. But the investment community absolutely interpreted that as a sign that ARK is going to buy these guys. So that means a lot, right? Number one, it means that ARK has the confidence to potentially put money on the line if they do buy these guys. Number two, it means that they will put money in here. That alone will drive up the share price. And number three, ARK has a ton of followers. There are a lot of people that look at what ARK buys and just come in behind them and buy the individual stocks rather than the ETF. Okay, so given where the share price is right now with this meteoric rise, what does it actually mean in terms of valuation? In fact, as I record this video, the stock is trading over $7. If you look at what that means, they moved from a market cap at $70 million in IPO all the way up to just over $1 billion today, judging by market cap and share price alone. So really, it's clear that at this point, the valuation has shifted away from fundamentals, in other words, tied to sales, and a large part of it, the lion's share, is absolutely driven by speculation. Speculation both in terms of the fact that they are a viable turnaround strategy, and also speculation on the fact of what ARK may or may not do here. Now, even if we were to take a look at comparables here, I took a snapshot on price to sales and compared BNGO to some of their peers in this particular space. When I took this snapshot, the share price was around $3. So at $3, if you look at price to sales from the last quarter, they would compare favorably to some of these companies, but on the high end. So if you get into that $55, $56 number in terms of price to sales, it may be that you could make an argument that they are priced comparably to some of these companies. And so guys, really, that's what my opinion is based on this one. I think anything above $3 is driven by speculation. Not to say that that speculation is wrong or bad or it's gambling or anything like that, because I totally agree that it comes down to what ARK does. And I think if you want to speculate on the fact that ARK may buy into these guys, then you could have a huge win on your hands, even from the current price point. I think a number of buyers that ARK could bring to this, both in terms of the speculators before an ARK purchase and the followers after an ARK purchase, this thing could absolutely take off and double or even more from even the current price point. And that's really the risk that you're taking here, is that the ARK investment doesn't materialize. If it doesn't, I think the share price is quite likely to sink down to something that is more closely supported by the fundamentals, and I think that is closer to a $3 number in terms of the share price. I have no idea if ARK is going to buy this one. It's all based on an indication of interest on Twitter at this point. It seems odd to me that ARK would signal that interest publicly. Why would they not contact these guys privately and avoid a run-up in price before buying it? So the whole thing looks a little bit shaky to me. Personally, it's not something that I would risk my own money on. I think that there is way too much speculation in terms of this one. That said, it's still a good turnaround story. So if the speculation dies out a little bit and comes down, I think it might be more reasonable to consider taking a position on this one, regardless of what ARK does or doesn't do. So that's it, guys. I hope this helps you figure out this one and make sense of it. If it does, please throw a like on the video. It really helps me out. Please consider subscribing, ring the bell, and I'll see you on the next one.